Good morning. You're watching the F&O Show on Bloomberg Went Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Good morning, Navneet. I'm Agam Akil, the top headlines. Sensex hits a new record on opening while Nifty is within striking distance of new high. India VIX declines. Open interest surges in Piramal Enterprises and ONGC as traders take fresh positions in their respective futures. ACC's strong volume growth leads the cement pack higher. The stock gains most in over 9 years. And higher input costs may hurt Asian Paints margins in its June quarter as the company is expected to report its results today.
All right, those are the top headlines at this hour. A lot of stocks moving around on back of earnings. But let's tell you what's happening with the markets today. Sensex touches fresh highs in today's trade, whereas Nifty is now inching very closer to its all-time high level, currently trading with gains of almost 40 points at 11,130. And the next level, definitely, which the street will be eyeing for, is the 11,171 mark, which was last touched on January 29th, 2018. Bank Nifty also sitting with gains of nearly 60 points as we speak. So good going there. Let's just pull up the futures and check what's happening with the data there. And also, if you could just pull up the rollover plates, that will be really helpful considering this is the expiry week. So the July futures currently with the trading with a premium of 7 points, 3.5% open interest there. Rollover just about the same where we closed yesterday. We'll probably get a better trend towards the end of the day. In terms of Bank Nifty, which was where we saw unwinding coming about in yesterday's session. So as you can see, August futures open interest 16% right now, 15% rollover overall for the Bank Nifty futures. India VIX, actually, that's been providing comfort to the bulls in this market. Yesterday fell almost 3.5% now. At 12.5, which is a good level for the bulls, 3% lower for India Volatility Index. In terms of broader markets, they too are trending higher, and all the sectoral indices today have been trading in the positive territory. Small cap index 1.3% higher, and the Nifty mid cap index up almost close to 1%. Let me tell you quickly what's happening with the options data. The put-call ratio yesterday closed at 1.8 on Nifty. Remember, this is indicating that we could be in an overbought situation. So watch out for the Nifty PCR, which is now at a very high level. In terms of maximum open interest now for the July series, it is at the 11,000 put and the 11,100 call. So that's the range we're watching out probably for the expiry till this Thursday. And in today's session also, we've seen a lot of put writing coming into the strikes like 11,100. That's already added nearly 15 lakh shares. And also on the call side, the call writers now running for cover who would have written the 11,000 call, that shared nearly 1.6 lakh shares, but 11,200 strike now adding almost close to 3 lakh shares. So that's about the options data, Agam, but what's happening with the stock futures? Well,
I reckon, Navneet, today it'll be about the cement pack. That's the one which is advancing in trade, and ACC right at the top following its earnings. We have 38% increase in open interest towards its July futures. Bear in mind, the expiry this Thursday, and we have seen a 13% increase in its underlying. Piramal Enterprises is the other one where we have seen an increase, and this is once again towards the fresh longs. ONGC, don't forget, is while it really hasn't seen too much in terms of its underlying, we have seen a little bit of a surge in its open interest. Adani Enterprises and Balakrishna, among others, seeing longs build up. Not too much to speak for when it comes to unwinding, but let's pull up that list anyways because there are a bunch of names out there. Dalmia Bharat is seeing short covering after a little bit of a turnaround, so we're seeing strength today, and it's the same for Idea Cellular as well, where we are looking at a decline in open interest by as much 6%, whereas its underlying advances by 7%, thereby short covering coming through there as well. So I'll be watching out for Dalmia Bharat and Idea along with ACC and Piramal Enterprises in today's GF trade. But I'm going to move across and take stock of Bata India, where it's reported a stellar set of numbers when it comes to the June quarter with 37% jump in its bottom line. What were the key highlights of the quarter gone by? And let's not forget the benefits of the GST rates also affecting the footwear industries. Joining us right now is the Director of Finance and Chief Financial Officer, Kumar Gupta. Mr. Gupta, good morning and thank you for joining us, sir. I'm going to start off with the earnings. How much of the top line growth do you attribute to volumes, and to what extent is the top line growth also attributed to the pricing that you see in the quarter?
in first quarter, volume growth was not very big, but it was there, about 1 to 2%. However, turnover growth was, if we compare last year number were pre-GST, while this year numbers are post-GST, which are not comparable. But retail growth with these numbers were 8% and wholesale was flat. If we compare in retail like to like, growth was around 13%.
Right, sir. So I'm going to talk about the revision in GST rates. For the 5% GST threshold, which has been raised for 1,000 rupees per pair, what does that contribute to your overall revenues?
We welcome this consumer-centric decision of GST Council. It is a very positive move to reduce GST from 18% to 5% on the footwear ranging 500 to 1,000, which is very good for our customers. Means, for your information, between 500 to 1,000, in value term, we have about 50% revenue from this segment. But means this benefit we are committed to pass on to our consumers, which will give a boost. Consumption of footwear will increase, and it will be good for organized sector as against unorganized sector.
Right, and will you be passing on the full benefit of the GST raise to consumers, or will it only be partial, sir?
Whatever additional benefit we will get on account of reduction in GST rate from 18% to 5%, we will pass on this entire benefit to our customers. It's a very good move from government side, which will give a positive boost to footwear industry.
And what do you have in mind for store expansion for the upcoming financial year, sir?
We have a plan to open around 100 retail stores of Bata. In addition to that, we also have a plan to open about 50 franchisee stores in 18-19 financial year.
So can you tell us a little more about your same-store sales growth as well, and how much it can improve in the year?
Same-store growth, we are expecting high single digit during FY 18-19.
And so before we get to our guests on the show, here's a reminder: if you have any queries regarding the futures and options space, well, okay, I'm actually, pardon me about that. You can call us on 022 45 41 4141 or write to us on Twitter or Facebook, or of course with the Ask You hashtag. But with that, we should welcome in our experts for the day.
Sure, and let's get them on board. We've got Chheda of Nirmal Bank Securities, Nirav Chheda of Nirmal Bank Securities, and Amit Shah of BOBCAPS will be joining us in a while. Hi Nirav, good morning, and thanks a lot for joining us today once again in the F&O Show. Well, the markets are looking all good in the expiry week. We've crossed the 11,000 mark, and probably we're eyeing the all-time high levels. Are you taking any fresh trades at these levels, or let's say if somebody's carrying out their long positions, what's the target on the upside?
Yeah. See, only on the index front, I'm carrying more trades in Bank Nifty because Nifty is nearing its all-time highs, and there is bound to be some amount of selling pressure coming in from there. Its previous high on the future was around 11,185, and it is very near to it. So risk reward at this level is also not very good. So I believe let it break out above 11,200 odd levels on a closing basis, and then we can have a bigger chunk of the pie. It can go up towards 11,400, 11,500 odd levels then. So that is when one can be buying with a stop loss of about 11,100. At current levels, I believe Bank Nifty is more likely to move about 200 to 50 points from here, and that is why one should be carrying positions in Bank Nifty. However, I just like to say, as you said, the PCR is near 1.80. So that is one sign where we are getting into overbought zones. So any signs of selling, one should be aware of it, and hedging will be a good option in the Nifty index at least.
Right, Nirav. So in that case, what you're recommending in terms of options, how would you employ that when it comes to the benchmark indices?
Yeah. See, I would be buying Bank Nifty 27,200 call options. It is around 100 or 95 odd levels. You can buy at those levels. You can keep a stop loss of 50. I'm expecting an expiry about 27,300 odd levels. So if that comes, we can get a target of about 200 points. So that should be a target on the Bank Nifty, and the stop loss should be around 50 points.
Okay, so that's the option strategy in Bank Nifty coming in from Nirav. I think we've got Amit Shah as well, who joins us on the phone line. Hi, Amit. Good morning to you. Take us through your approach towards the market at these higher levels. Any strategy that you have either on the index or any stock futures?
Yes. So if you see the market, it took its own sweet time consolidating between the higher band from last couple of weeks. And if we see the momentum, what it has post, it has given a breakout above 11,000, mainly participating by the large caps. We saw Reliance, we saw the IT packs again favoring. We saw robust buying coming across the FMCG space. And even the call open interest distribution, which moved from 11,000 to 11,100 during this last 1 week. So definitely market index is poised for a fresh high. Looking at the broader market range on the downside, the momentum support is placed for around 11,050, 11,075 odd. Continuing to hold about these levels, I believe ahead of the expiry, we will see a fresh high, and post that the buying momentum can continue further. So with this view, I recommend a long future for the August series with stop loss around 11,075 odd. On a positional front, for someone who is slightly high risk oriented, can keep a stop loss around the 11,000 mark, which is 75 points more on the downside. And one can look for a target towards 11,300 to 11,400 on the higher side. So that would be the index strategy. I continue to believe the FMCG and IT will drive the market forward, and especially Reliance in the oil and gas space, which will be a very strong participator from here on.
All right, let's get in some stock ideas then. And Nirav, I'm going to come to you. What stocks are you betting on? Yeah.
See, very rarely does that happen that in the last 40 odd minutes a stock runs up 75, 80 rupees. But that is what has happened with PEL. Piramal, I had recommended a buy, but it is right now trading near our target. However, I'll just read it out. It was a buy around 25.80, 25.90 odd levels. The stop loss for the same was 25.40. See, the real reason behind buying this stock was it has given a breakout, and in a medium-term perspective, I expected it to come up towards 2,800 odd levels. However, my expiry target for this stock was around 26.60, which it hit right now. So there is no trade at this moment in this stock. If it comes down, one can buy. The second one was a buy on ITC. If you see, I have been consistently recommending ITC on this show, and I believe ITC is likely to move up towards 320, 340 odd levels. Even now, one can be buying at current levels with a stop loss of 280 on the August futures, and the possible trading target would be around 295 and 300.
Okay, so those are two long calls coming in from Nirav. Amit, you were speaking about Reliance Industries. I believe you have a long call on that one and also on XI futures.
Right. So if you see, Reliance since the inception of the July series has seen a substantial amount of short covering during the early weeks. And now we are seeing a long participation happening straight away to the August, and few speculative trades adding to the July series as well. So I would be a buyer in Reliance at every decline. I continue to hold for a positional target of 1250 odd levels on the higher side. For short term, I believe the stock holds a very good support around 1100 to 1095 odd, and continue to drive above 1125. That's where the momentum resistance is placed. The more it sustains above that, soon the momentum can trigger towards 1190 to 1190 to 1200 levels on the higher side in short-term basis. So every dip, I would still remain a buyer on this counter from here on. Exide Industries too has seen a very good has started to see a very good rollovers activity since yesterday. The open interest has always been spurting from last couple of weeks since the time it has been hovering about 260 odd levels. And the stock has given a breakout about 270, which was its consolidation phase on the monthly chart. One can trade with a stop loss at 266 and look for a target towards 282 to 285 on the higher side. Both these counters on a rollover perspective, I believe, can see a good momentum on the rollovers and good open interest base ahead of the August series.
That's interesting. Okay, so a few calls coming in from our experts today. Let's pull up something like ACC. Of course, that's seeing tremendous traction, and it's not just ACC; it's a lot of other cement stocks as well. But ACC specifically, in this case, its underlying is advanced by as much as 13%. And of course, there is an addition in open interest when it comes to July as well as August futures. The rollover is currently at around 22 or 23%. Nirav, what levels would you keep an eye on when it comes to ACC? I reckon at this point in time, I'm assuming that you would go long on something like an ACC.
Yeah. See, ACC has given a breakout above 1405 levels, and this is a big breakout. So the trend has reversed for a longer term perspective. I believe it can go up towards 1600, 1650 odd levels. So one can be buying at current levels and even on dips. Now the stop loss for the same will, turn to around 1440. So you can keep that stop loss and continue to go long. The trailing stop loss in this will be a good strategy. I believe it should move up towards 1650 probably very fast, because there has been a huge consolidation in this stock, and that too with good amount of volumes at the lower end, and that is why I believe the aggression with which the buying will come will be much faster. So probably you will see 1650 in about 2 weeks, 3 weeks time.
Okay, that's ACC for you. Well, it's not every day that majority of the gainers in the F&O securities are your cement stocks. So you've got India Cement, Dalmia, Ambuja, you name it. Even Ramco has seen 7% uptick in today's trading session. So watch out for the entire pack. And remember, all of them have been moving higher on back of stellar set of numbers reported by ACC. But I'm just going to address a couple of nifty constituents and the commodity stocks. Hindalco and Vedanta, both of them have surged. Remember, Vedanta just in last hour of trade yesterday also went up by almost 3 to 4%, and obviously Hindustan Zinc numbers would have impacted the action in yesterday's trade. Amit, any thoughts, any view on stocks like Hindalco or on Vedanta? Do you think any position can be taken here, considering there was a lot of correction that was seen in metal stocks in the recent past?
See, the entire space has seen a lot of pain over the last 45, 50 odd days, and has been making a consistent lower top, lower bottom formation. So though it has seen some kind of a respite right now, but I would not recommend to enter into this trade. Let these volatility get diluted over a period of time, and would rather wait for a confirmation of one higher top or higher bottom formation to understand what is happening in the entire metal space. So I will still avoid the entire pack as a whole, and would continue to focus on the strength where FMCG, IT and Reliance and all these counters which are showing a good amount of momentum and can continue to drive on from here on. So I will avoid metal space at this point of time.
All right. Well, we're going to quickly go and take some queries, and I believe the first query that we have today is on Hindustan Unilever. We have Shibu SB on Facebook who writes to us that he's bought Hindustan Unilever's 1720 call at a premium of 8. What's the view here? Let's pull up Hindustan Unilever's derivatives contracts and see where this one is currently trading at. So its underlying is at around 1692, about I would say 28 odd points away from this specific call going in the money. We have seen some traction, but not too much. Its underlying is largely flat right now. Can we also take a look at this specific option, if it's possible? That's currently trading at around 6.85. So he is making a little bit of a loss at this point in time. Amit, I'm going to take your view on Hindustan Unilever. How are you viewing trade on this one? And considering his Option is July 1. Keeping the July expiry in mind, do you think that Hindustan Unilever is likely to go above 1720? What would you recommend Shivu SB to do with his position? Amit, this question was for you on Hindustan Unilever.
Yeah, so I like the counter overall, though the stock has seen after the results some kind of a profit booking activity. I would recommend that someone who is looking from a purely positional point of view can stay intact for the long position. And the dip what has come is purely a buying opportunity for someone who is looking at a slightly longer term horizon. I continue to believe the FMCG space will be space where one can look at. So HUL definitely can contribute a lot more from here. Can see a 5 to 7% upside in coming few weeks time frame.
Okay, that's the view on HUL. Amit, we'll let you go on that note, and many thanks for joining us despite of your tight schedule. Appreciate your time.
Thank you very much.
Okay, moving on. Let's take the next query from YouTube. Debujyoti Banerjee writes to us, he spot Nifty July 11,1200 call strike after paying a premium of 9.5 rupees. Debujyoti wants to know, should he be booking profits here or he should hold on to his position considering the expiry is on this Thursday? Nirav, he's paid 10 rupees premium. It's almost doubled, I believe. The current premium on 11,200 call strike is 21. Should he book profits or take little bit risk and trail stop losses till the expiry day?
Yeah. See, if he's bought more than one lot, then he should be booking half his positions. Also, he should be trailing his positions with a stop loss of about 5 rupees. I believe Nifty is near a very, very important level of 11,185. There is bound to be certain amount of selling pressure before expiry, and a breakout will mean that the expiry is above 11,250 odd level. So again, he can take a chance with it because he's bought it at very cheap rate. He should be booking half his positions and keep a stop loss of 5.
All right. The other interesting query that we have is on L&T. Now, we have Bikash Pekare on YouTube who is asking us about one lot of L&T 1300 call that he holds at around 19.65. Well, his question is actually to do with the strength that we've seen in L&T Finance and L&T Infotech along with tech. What should we do? Okay, so Bikash, I'm going to tell you, because of the fact that these companies are all separate and they may be connected through shareholding, but they do not necessarily have a substantial implication on the earnings of L&T. That said, we will be keeping an eye on L&T's earnings themselves, but at this point in time, we really can't, put in a correlation. But Nirav, I'm going to take this question on to you on L&T right now. This specific call is not too far away from the mark of around 1300. In fact, Bikash is looking at a little bit of a profit at this point in time. Would you recommend that he hold on to the position right now when it comes to the long on L&T?
Yep. See, L&T is in a consolidation trend, and it has got stiff resistance around 1300 odd levels. So in terms of this expiry, I believe 1300 is going to prove to be a strong resistance on the upside, and it is going to do some breaking out above 1300 for his call to be profitable. I believe he's taken the 1320 call, so I would advise him to book profits around 1300 when L&T comes there. He can keep a stop loss about 1280, and I believe he should be taking a positional close today itself, because now tomorrow again time value will do its thing. So again today he should be closing out positions, even if it is not coming to 1300 levels. Book profits and exit positions.
Book profits and exit position is the call coming in on L&T. Let me quickly take another query on State Bank of India. Nikhil Raja on YouTube is asking from our experts if there is any position that can be taken for SBI July series. Okay, 3 days to go for the July series to expire. Nirav, would you suggest Nikhil to take any position on State Bank of India July futures or of the August futures?
Yeah. See, I would be more inclined towards August futures, and it will be on a breakout of 270 levels. See, this stock has witnessed a lot of selling from sub 320 odd levels, and ever since that breakdown, it has continued to witness a selling pressure on its downward trending trend line. So that trend line now comes to around 270 odd levels. So once that 270 levels is broken out above, you will see huge buying coming in SBI. It will be a cup and handle formation breakout as well. So there will be two formation breakouts, and that will mean that SBI will come up towards 310, 320 odd levels. I am seeing a lot of short covering also in the PSU space. So SBI along with other PSU banks are witnessing a lot of short covering in the last week and current week. So I would be waiting for this expiry, and probably on a breakout of 270, I'll be going aggressively long on the August series.
All right, going aggressively long on the August series as far as SBI is concerned. Of course, we do have another query on Larsen & Toubro where Ram Hegde on Facebook asks us about any targets for L&T August series in the wake of its results tomorrow. Well, Nirav has already mentioned that it is largely likely to remain range-bound and should go above the mark of 1300, where some action can be taken. But Nirav, just to address this one more query on Larsen & Toubro, again, could you also reiterate the levels that you'd keep an eye on when it comes to Larsen & Toubro right now?
Yeah. See, any close above 1310 would mean the stock has witnessed a breakout, and it can go up towards 1400, 1420 odd levels. So once you get a closing above the same, go long in L&T, and you can expect 1400 to come, and you can then keep a stop loss about 1290.
Okay, that's a view on L&T. I just want to quickly pull up Idea. The stock's gone up nearly 8%, and we addressed ACC. Look at India Cements too. That stock surged almost 11% in today's trading session. So good going, 10 to 11% for all these cement counters. Nirav, we leave it at that note. Appreciate you joining us today and taking us through your views in the derivatives market, and also helping our viewers with their queries. Well, shifting focus back to earnings, ICICI Securities posted mixed set of numbers for the June quarter, with the distribution business aiding the 9% growth in the top line. Well, what were the key highlights of the quarter gone by? Let's ask the management. Joining us on the phone line is the Managing Director and Chief Executive Officer Shilpa Naval Kumar, and also Saloni Dhanuka from our research team to take this conversation forward. Saloni, over to you.
Thanks for that, Navneet. So, talking about ICICI Securities numbers, ma'am, both profits and revenue has seen a growth of around 9 to 13% on a YOY basis. However, if you look at the numbers sequentially, there has been a sharp cut. Can you throw some lights there?
Yeah. So first, let me address the question relating to sequential earnings. I guess, like any financial services company, especially one that doesn't use capital and doesn't have lending on its books, we do see some degree of seasonality between the quarters. And typically quarter 4 tends to be one of the strongest quarters. Also, I just want to point out that quarter 4 had seen, I would say, one of the best quarters in already a very good year, which was last year. So maybe year on year is a better way to look at our numbers. And therefore, if I can now focus on, the performance, the 9% revenue growth in this muted market really came out of, very good performance in our distribution business, which has grown 17% year on year, and our investment banking business, which grew 19%. The other thing I'd like to point out is that this revenue growth was really aided by this diversified set of businesses, so that, even though broking was muted, it is really distribution and advisory which have helped the 9% growth. Last point on this quarterly performance is that because we are largely a digital company and we have kind of managed the costs, our operating leverage has shown through. That has really helped us with a 13% increase in our profit after tax.
Sure. Ma'am, despite a healthy growth in active client base and a good growth in market turnover, as you mentioned, your broking revenue has been muted this quarter. What has been the reason for that?
Yeah, so like I explained to you, broking revenue is naturally a function of a couple of things. One is market levels. Two, it would also be a function of the kind of investor interest that is there in markets and investor sentiment. Now, in a market like this, which is range-bound, really, and sentiments are muted, what typically happens is that the activity in derivatives and non-delivery, equities, that's the, activity that really stays high, while delivery volumes in the equity market tend to kind of stay muted. That naturally reflects in broking revenue. So that, kind of explains our broking performance. Having said that, at a time like this, it's really important to take note of what we are doing in terms of building this business. And I want to point out that we've actually acquired 1.1 lakh new clients in this quarter. We've also seen a 24% increase in our active clients on NSE. And I think all of this kind of, helps us understand better the operating performance of the company, which is different from the market performance.
All right, ma'am, since a majority of your income comes from broking business, how do you expect the revenue mix to change going forward, be it with respect to treasury, distribution, wealth, or equity?
Yeah, so Saloni, that's the very point I made, when you asked me about revenue, that while broking is, around 53% of what we do, and if we include even broking-related income, it's about 63%. The important thing is our non-broking revenues are actually 37% of the company and have actually increased year on year. And like I said, when a mutual fund and our distribution business has grown at 17%, again, I just want to point out some lead indicators there. I'm happy to share that even on the distribution front, we have actually increased our mutual fund average AUM by 31% compared to market AUM growth of 20%. And the fact that, a lot of our focus is on SIP-based, trail-based, business, which is evidenced by a 55% growth in our SIPs from about 7 lakh to 1.1 lakh, to about 11 lakh in this quarter.
Sure, ma'am. As you're talking about your distribution business, since there has been a very strong performance in terms of AUM as well as the revenue segment for mutual fund, how do you plan to sustain your performance in the distribution segment?
Saloni, I think the opportunity here is fairly large. And the way we look at it is, first of all, our digital shop and digital access to customers will give us, very wide reach across the country. I think the second thing is we have 200 branches across 75 cities through which we reach out to customers. Thirdly, we actually have a very good network of sub-brokers and IFAs, almost 5,000 of them, which gives us a third level of reach. So with all of these, three different ways of reaching out to customers, I think we will continue to add customers. That's number one. Number two is actually, even in terms of cross-sell, we already have, 4.1 million operational accounts. And really, as we cross-sell our mutual funds and, allow customers to look at investments in one place on ICICI Direct, I think that will give the second big, leg up in terms of how we distribute.
And ma'am, what are your plans with respect to other business segments, say investment banking, treasury, for the current fiscal year?
Yeah, so, investment banking, I would say, is a very key part of what we do at ICICI Securities for three reasons. One is, of course, the equity capital market access that, we take a number of corporates to raise money through various means in the equity capital markets. The second is on the institutional broking side, which you would have noticed has actually grown at 22% this year. And thirdly, we are ramping up our capabilities on the advisory side of the business, and have closed a couple of good advisory transactions this quarter. So I would say we would see growth in all of these in the coming year.
All right, ma'am, my last question to you is, since broking is a highly competitive space, can you tell us a bit about the visibility on margins and profits in this highly competitive space, say next 5 years or so, with respect to ROE?
Right. So I think, first of all, competition, I believe, is always good. It works for the customer. It expands the market. And it also drives innovation. And I think I would agree with you. It's a very competitive space, but I would equally say it is driving a very good innovation across all, players in this industry. I think the important thing over here is as India's savings become more financial and more, equitized, I would say the opportunity to grow the size of the pie is immense. And therefore, the focus will be on growing the pie. Margins, of course, one would not expect any expansion, but revenue growth will come out of expanding the pie.
All right, ma'am. Thank you so much for joining us on Bloomberg Quint. So that was the management of ICICI Securities, confident about growing their distribution business along with their broking segment. So with that, it's a wrap on this edition of F&O Show. For more news and updates, stay tuned to Bloomberg Quint Live.